MicroStrategy might end up beating the S&P.
Yeah, they're destined to become one of the largest companies in the world. I think everyone in the Bitcoin space that truly believes in Bitcoin knows that. But you want to make sure that they're doing it organically, like they're actually growing the company and creating value, not just diluting us into oblivion and everyone's losing money, but it's making up a larger and larger piece of their retirement plan. You know, every single equity mutual fund out there is measured against the S&P. Okay, so it doesn't matter what their investment objective is. Within reason, they're getting measured against the S&P 500. And if you're a fund manager, unless you're an absolute donkey, you're going to recognize that MicroStrategy's risk rewards off the charts, and you're just not going to have zero exposure to that.
Hey everybody, welcome to Treasury Orange. Today we're talking with Raleigh Durham, who's been closely tracking MSTR in the Bitcoin Treasury space. Raleigh, for those who don't know you, what's your background and how did you become so focused on MSTR?
Yeah, so I've been involved in the space for a long time. Really got heavily invested in MSTR a little over a year ago, kind of when we started making that run back in the summer of 24. Initial thesis was just, this is going in the NASDAQ. We're going to have access to passive flows. Certainly was watching a lot of the Quant Bros early stuff. Just felt the same about it. Had kind of felt the same about it for a long time, but couldn't quite put the thesis together all by myself. And just kept thinking, don't I want leveraged exposure to Bitcoin if I think Bitcoin's going up and to the right? And, got in very heavily margined, kept riding it up. Every time the buying power would become available, I'd buy more and more and more. And it just seemed like we had this flywheel going that wasn't going to stop.
Yeah, I agree. I think that's a story that will resonate with a lot of our viewers. I think a lot of us came into this trade around the same time, following along with Quant Bros and later True North. Why do you think that flywheel has kind of grinded to a halt since, really since last November?
Yeah, I mean, I think it's pretty simple to point your finger to the ATM. And I think that does have a lot to do with it. I've got a background in financial services, more so on the sell side, wealth management. Somewhere along the way, about maybe 8-10 years in, I got really interested in valuation models and that type of stuff. Pursued the CFA, didn't finish it. Kind of felt like I got what I wanted out of it. Failed the level 3 twice and just never got around to taking it again. But I think that those skills have really helped me with kind of understanding mNAV and just understanding kind of how to value MicroStrategy. I think, there's a lot of people in this space that maybe they're from Bitcoin or engineering, that kind of side, and they don't have quite the financial experience. And this is a kind of a new area. So maybe some of the skills that they have or they've applied to other stocks are not quite panning out at the moment for MicroStrategy. And I think that ATM, the dilution has really, really hampered their growth. It's just tough. We had a lot of people entering kind of diamond hand into shares. We had a lot of people that were buying leveraged like MSTX or MSTU. And they just got squashed in that, and it kind of broke the flywheel.
Yeah. That opens up a lot of questions, Raleigh. So our audience is really familiar with the mNAV calculation. Do you think that mNAV compression is like a structural issue because of how hard Saylor's, hammered the ATM on the stock? How bad is it that Strategy's mNAV is compressing so much during a bull run in Bitcoin's price?
Yeah, I mean, the mNAV was always a hot topic of debate, right? I mean, you're paying $1.80 or $1.60 for $1 of Bitcoin, and you're kind of basing it on that growth. And I know that I kind of got sucked into that myself. And when Chanos had that interview with Pierre Richard, I probably watched that thing 10, 12 times. I'd go to sleep with it on, trying to listen to it, hear all the arguments. I had a tweet that got, 60,000 impressions about paying $1.85. For $1 a share, and Chanos actually responded to it and kind of made me rethink some of my thought process. The thing is, you got to understand, when you're paying a premium and Saylor's arbing that premium, you're capturing very minute Bitcoin gains. It's essentially a reciprocal ratio problem, like we saw with Metaplanet. They were at a 7x mNAV, and everyone thought, oh, the mNAV will only come down a little bit. No, because when you do that, it's 7/1 times 1/7. Essentially, you're taking 7 and you're throwing a 1 at it. You're compressing the mNAV all the way to 1. It's a little bit like having a neutral soil and throwing sulfuric acid on it. Okay, so the higher your mNAV is, the more you dilute, the more extreme that's going to compress. And we just saw that with tons of Bitcoin treasuries. They're kind of out of favor right now because the mNAV got smashed, investors got killed. You're not seeing it to the same degree with MicroStrategy because they were trading in that 1.4 to 2.0 range. So it's not quite the same thing. There's also less elasticity with MicroStrategy due to the fact that they're included in several indices like the Nasdaq and also some smaller ones. So those passive flows are still coming in when they're building the size of the balance sheet. The passive flows are still coming in, so it doesn't get watered down as heavily. It's if you took a scalding water in your bathtub and dumped 10 buckets of ice in it, it's not going to stay at 200 degrees very long. And that's what's happening when you have a 7x mNAV and you start diluting. It's significantly less with MicroStrategy because they're only coming from a 1.5 or a 1.6 or whatever, and it's taking more time. But investors are starting to come around. They're starting to realize the damage done by it. Some people are in denial, but they're learning the hard way as to why others are jumping off the ship.
Yeah, I try to put myself in Michael Saylor's shoes, and I despite a lot of the sentiment right now, personally, I still have a high degree of confidence in him to be able to effectively navigate this. But when I put myself in his shoes, it is it's kind of like Lord of the Rings. It's really hard to resist that tapping the ATM because you can accrete that Bitcoin, and like has MSTR gotten so big? Has strategy gotten so big that they are just going to be more and more reliant on the ATM because they've got these perpetual preferred equities, and their underlying business doesn't cash flow all that much compared to their entire balance sheet. What do you think about that, Riley?
Yeah. I mean, the cash flow is obviously an issue. They don't have the only way they can do this operate is through financing activities, and they can't use their software, their underlying business. Side note, the first company that goes to a Bitcoin standard that actually has cash flows coming in doesn't have to be Apple or Tesla. It just needs to be something that's not a zombie company that actually has cash flows. They're going to smash. Okay. They're going to absolutely smash. But yeah, the size, I think you can go either way on that. There was a lot of hype behind the small companies because they can grow their Bitcoin yield faster. And there's something to be said for that. But they don't have access to the credit markets the way MicroStrategy does. And so they're just having to hyper dilute to try to reach. They're in the stage one of a Bitcoin treasury company's standard. MicroStrategy has already gone through all that. You got out of the 5 years of growth and leverage and all this stuff, and now they're in a much better situation. The perpetual preferreds are big. I've heard a lot of people mention, when you're matching duration from your assets to your liabilities, that's very important. You don't want your loans to come due in 3 years and Bitcoin's at the bottom of the bear market. You're having to cough up Bitcoin or issue terms that are not great for the investors. So I don't look at the size of MicroStrategy as being a big hindrance. I think it's a positive overall. It does open them up to the whole web of things. I don't think Chanos is going to run this strategy on a tiny little dollar stock, just due to the float and everything involved. So we're getting hit from different vectors. So the size maybe can have some limiting constraints, but overall, I look at that as a positive. When you're
Yeah.
talking about institutional money, they don't want to mess around with a company that's $1 billion. They want to look at the one that's 100 billion.
Right. Exactly. I think that's well said. Now, you touched upon all these other kind of Bitcoin startups, if you will, those companies that have done reverse mergers and just are pretty much operating as a Bitcoin flywheel with virtually no underlying business in a lot of cases. Do you think the dilution effect of investor interest in those kind of stocks have hurt strategy, or is strategy too big that's not really a factor in why the compression of the mNAV and the stock prices happened?
I think it's certainly a factor. I mean, anytime you have capital that's fleeing to go to the, moth to a flame to the next hot thing, it's certainly a factor. I don't know that I'd be able to point my finger as to how big of a factor it is, but it can close the moat. I think it'd be more of a factor down the line. Like if strategy's kind of out on an island right now with these credit products. They're technically equity, but preferreds act. They're kind of a hybrid between credit and equity. In liquidation, they show up as equity, but they serve as more of a credit vehicle right now. So, um, it would be hard for me to say. I mean, we can only work with the scenario we have, which is other people are competing. I do think it puts some pressure on the mNAV for sure. Is that 0.1 of the mNAV, or is that, taking it from 2 to 1? I'm not sure. I think that's a tough call.
Yeah. Yeah, it's really hard to like, um, how much should we attribute to to certain factors that are at play? I think we're still kind of navigating what that looks like with Bitcoin treasury companies on the whole. So big news recently, at least on Twitter, is that Josh Mandell has been really publicly critical of Michael Saylor lately. He's talked about how he's lost trust in Saylor because of the dilution, where Saylor kind of went back on their Q2 earnings call, where he said he wasn't going to hit the ATM basically below a 2.5x mNAV, which sounded pretty cool to me at the time. But realistically, looking back, you can see why Saylor maybe backpedaled on that. Can you give our viewers like a high level view of what's going on with that feud, and what's your take, and where do you stand on it?
Or let me flip my shirt around, since I'm kind of taking the Bears case in this one, and get off the most hated rally for the second most hated rally. Um, yeah, I'm pretty much in Josh's camp on this one. I've been kind of aligned with his view on that for a long time. Um, Unfortunate to see them getting in a block more, Josh Mandell, all that stuff. There's some humor coming out of it, but um, I think the main point here is when you issue guidance like that, at 2.5, and then you turn around and change it 2 weeks later, you're introducing a lot of uncertainty to investors. I personally had gone back into the stock very heavily in probably April, and had ridden it up from 1.4 to about 2.0. We were getting close to that 2.0. It was $460 a share. Next thing I know, I'm getting wrecked down to 420. That's when I started divesting again. 380, I was selling in the money, deep in the money calls, and kind of limited my downside, mitigated some risk, because I'm a margin trader. So, when the stock goes down, I get hammered. And I it's really disappointing to see them issue that guidance and then revert when people are making decisions with their money. And the equity ATM, from my view, should really only be used for issuing dividends, or if they get over their target leverage ratio. Let's say Bitcoin has a terrible week and they're trading at 26%, and they want to be at 25. That's the time to dilute the stock a little bit, just reassure the people in the credit products that, everything's going to be okay. We're still able to raise capital, and dividends are not in jeopardy. And they want to stay in that target leverage ratio, because that's something they announced a long time ago. They wanted to kind of hem and haw on that 20 to 30% zone, just so that the credit products have an idea of what they're aiming to do long term, and also as well in the short run. And yeah, going back on that guidance, I think that was a big mistake. It really just, it left everyone in the dark as to what they're really doing. This spring and summer, when I was going back heavily into the stock, I was under the assumption, and I made this assumption myself, that they were not going to continue diluting the stock so heavily now that they had the credit products. Now, if you have a credit product lined up and you go to the market and it's a great product and we think we're going to be able to raise a ton of capital, and they say, hey, we need your leverage ratio to be X instead of Y, that would be the time to dilute the stock a little bit, because you're following it up with an issue that at better terms, that are more accretive to shareholders. That's a good time to do it. That's an appropriate time to do it. So I think it's okay to put in the guidance that, occasionally they'll do it when they see it in the best interest. But what you don't want to do is be saying, I want mixed messages.
Yeah, Riley, I think that's a really good perspective. Because I consider myself more of like a long term investor on strategy. It's not to say I don't make trades on it, certainly. But as someone who's kind of like a buy and hold for like 20 years guy on this stock, maybe I'm right, maybe I'm wrong. I think it is like really important to hear from traders that you're relying on transparency from Saylor, because I think he has provided it a lot over the past 5 years, right? He's largely done what he said, and to have more of a gray area with that.
Yeah, he had built up a lot of trust with people over the years, because they had pretty much, even when they were first going to Bitcoin, they did that reverse Dutch auction. They allowed all the old shareholders to get out at good pricing, and everything's been pretty transparent up to let's say the last year, when you kind of introduced that 21-21 plan over 3 years that took place in 6 months. And not only did it take, the equity took place in 6 months, they never fulfilled their obligation on the 15 extra billion or 16 extra billion of the convertibles, which is kind of what everyone was in. They pivot to the preferreds. Okay, they're going a different route, and they they diluted the equity so hard that it removed the volatility, and the volatility is what the convertible bonds were seeking. So they kind of put themselves in a tough situation. They reloaded on the easy side, which is equity. You can almost always issue equity. It's the cost of capital is high. And ever since that, what was that, November of 21, October 20, or 24, things have gotten a little murky. It's right about the same name. They changed the name of the company as well. Seemed like the strategy changed. And that's got a lot of people concerned.
Yeah, I think, one thing Saylor's always said is whoever has the most Bitcoin wins. And I think he's standing by that, and he saw the equity, tapping the equity as MSTR got included into the NASDAQ and maybe some other indexes. I think he saw that as a real opportunity and maybe just got over his skis a little bit. Do you think he abandoned the convertible bond market a little too early, Riley?
Not necessarily, because I'm not involved in those negotiations, but it's easy to see that the terms were becoming less accretive over time. I think initially there was like a 60% gain before it would convert, and by the time we got to the end, it was like at 30%, and that's clearly due because the volatility was getting smashed, and those convertible arbs they're collecting less premiums. They're foregoing interest. Okay, right? They accepted a 0% bond. They got to have a way to make money, and at a certain point, just based on where it was in the capital structure at the top, and the also again the duration mismatch, right? Those bonds are due in 5 years, so that means at the end of 5 years, if MicroStrategy has not risen enough in price to convert, uh, they're going to have to cough up Bitcoin or refinance at worse terms, or come up with that capital somehow. So I think he realized, these were very helpful for the time. At a certain point, the market changes, what investors are looking for changes. The convertible bond market's not a huge market, so they may have kind of saturated themselves. An issuer doesn't need $10 billion to themselves in MicroStrategy bonds, and not everyone's looking to play this volatility method that they are doing. So I wouldn't want to be the one to say he gave up on it too early. Um, One of the things I've really wanted to see is like a zero coupon bond. I think that'd be an awesome fit. When he talks about the gold rush era, we have approximately 9 years, and 9 years from now, 99% of all the Bitcoin that will ever be mined is mined. Okay, so these next 10 years are pivotal. So if you're looking for a way to um, unlock these next 10 years, I think if they were to issue something like a zero coupon bond that's 10 years in duration, that takes you to through 2035. You don't have to make any coupon payments along the way. So in that scenario, let's say you issued 10 billion worth of bonds, they would collect maybe 4 to 5 billion right now. That would probably trade somewhere between 40 to 50 cents. You collect the 4 or 5 billion, you buy the Bitcoin. 10 years from now, you have a liability coming due. You've got plenty of time to start making arrangements for that. And you're not having to make all these dividend payments along the way. And trust me, there's tons of investors out there who are interested in doubling their money in 10 years, or 1.5 times in their money in 10 years. And now you're taking the bet that Bitcoin at what, 1, what's it at today? 110, 111? Bitcoin only has to
Hmm.
be at like 220 to 260 for that to be a profitable bet. I think that's a bet that a lot of MicroStrategy holders would make. Maybe all of them, virtually all of them. I think it would be popular if you issued it for the 5 billion that were conveniently at $20 billion worth of preferreds and convertibles, or 20%. That would take you to about 25%. So that gets you right in that 20 to 30 year range. It's got some duration. It's not the perpetual duration like the preferreds, but it's 10 years is a lot longer than 5 years. You're kind of building out that yield curve.
Okay, yeah. Let me just try to wrap my head around that, Riley. So you're talking about a tradable bond product that they kind of IPO that's going to deliver like a basically 2x on your money in 10 years. Is that right?
Yeah, they're not as popular as they used to be, the zero coupon bonds. They were, I can't remember what decade they were still pretty prevalent in, maybe the 70s, 80s. But essentially, when a company needs to raise money, um, but they know they're ways out from cabin cash flow, or say they're building a nuclear reactor, and they need 10 years before this thing starts generating revenue. They don't want to be making payments all the way along the way. So you issue it at a massive discount, massive, in this case, 50 cents on the dollar, maybe 40 cents on the dollar. So you're going to intake the 4 to 5 billion right now. You owe 10 billion in November of 2035. But in the meantime, you're not having to make any payments. So as an investor, I'm looking at doubling, perhaps a little more, my money, assuming they can fulfill the obligation. I can sell that bond at any time. I can sell it after year 1, year 3, year 6. Depending on how liquid it is, I may make even more money getting out early. But it would be a good way to kind of, with all these, you hear about the dividend, they got to pay these dividends. That would take the dividend out of play. It's a known liability. We all agree, anyone in the Bitcoin space agrees these next 10 years are pivotal, right? Not 9 years to be exact. So the clock's running. I think it'd be a way to accumulate a massive stash. I don't think people are going to panic about an obligation that's due 10 years from now.
Right, right. So yeah, I mean that would function a lot like the perpetual preferreds, except it does eventually come due, but you don't have to pay the dividend. It's just a deferred dividend, I guess, in a sense, right? So, um, yeah, I wonder if that's an attractive product for someone who I thought would be more interested in the perpetual preferreds, like pension funds across the U.S. I think that's kind of some of the market that Saylor was targeting. Pension funds, people who need fixed income to pay out people in retirement, essentially.
Yeah, absolutely. Because in the pension space, you're always, again, matching that the duration. And so a company knows, let's say I'm GM and I know I have 20% of my workforce is hitting retirement age in 10 years or 7 years. I have an idea of when these bills are going to be due. So I have an idea like, oh, it would be great to double this 5% or 2% of our pension fund in these next 7 years, and taking very little risk relative to, some of the other absolute crap that's out there in the bond market right now.
I wonder, do you think it's a sales issue? They need to go out and be able to sell this better or network better? Or do you think it's credit rating agencies need to
Yeah,
step
that
in and rate these products?
it's the credit ratings. I mean, there's tons of money tied up in funds, whether it be mutual funds, ETFs, um, people with very strict investment objectives. They need those ratings. And I think they recognize that and they're working towards that. That's going to open up just a huge pool of capital. Um, I mean, I think that's absolutely a no brainer. And getting into the S&P 500 would do a world of help towards getting those ratings established, because it brings in the passive flows and the equity buffer and all those things that those companies that are investing are looking for. It's really hard. There's a lot of career risk when you're managing money. If you take a shot on something and it returns 2 extra percent, great. You get a pat on the back, maybe a bigger bonus. But if you're already making $2 million a year, what are you really thinking about? You don't want to lose your job. And investing in something that's unrated, or that you're going to have to go spend money to do tons of due diligence on, you're going to have to argue all day with other people. It's just a lot. It's a lot. Those credit ratings are absolutely a huge deal.
Yeah, it seems a little bit of a black box with those. Do you have any sense for, are credit rating agencies going to be able to wrap their heads around this? I'm sure Saylor or in the team are probably out there trying to educate them, at least behind the scenes.
I think so. I mean, if you think about the people behind that, they probably trend a little older. They're more conservative. It's their reputation on the line here as well. But essentially, at the end of the day, this stuff's all a math problem, right? And when Saylor speaks to the over collateralization with the preferreds, he understands that. If you're over collateralized by 7x or 10x, and you're working towards that target, it's a math problem. That company doesn't, the investor group, they don't really have to care what Bitcoin does. If they see you're 7 times over collateralized and the other thing they're looking at's, not even 1 time over collateralized. And oh, by the way, they're offering, double the rate on the product. It's not like these guys are going to allocate 100% of their fund to it. They're putting in tiny amounts, 0.2 or 0.1. It's a math problem. And people are yield starved, and they've been yield starved since 2008. That most of these pensions, they're underfunded, and that's everybody. The private, public sector, doesn't matter. So anything they can do to generate yield is going to be popular. They've got to all be hesitant to put it in unrated bonds, though.
Makes sense. Yeah, it's crazy to me how many underfunded pensions we have in the U.S. and I think Bitcoin could be part of the process of making them whole. You talked about S&P 500 inclusion rally. I think recently we've seen um, with companies like AppLovin that it took a couple quarters for, I think 3 quarters for the S&P to finally include them. I think Tesla was maybe a little bit longer than that, maybe a year, but from when they qualified to when the S&P committee admitted them into the index. What's your take or sense for how quickly we see MSTR get into the S&P 500?
That's the $1 billion question right now. Because it's a big deal. It really is. When you're talking about creating an equity buffer with the passive flows coming in, they're going to give those creditors a lot more confidence. It's a huge deal. And there's also, every single equity mutual fund out there is measured against the S&P. Okay. So it doesn't matter what their investment objective is within reason, they're getting measured against the S&P 500. When someone comes in and talks to their advisor, what's the first thing they look at? They say, "Hey, your portfolio returned 11%. The S&P was up 8.8. We did great. Let's stick with the plan." Right? Or vice versa. It's a difficult conversation if you returned 5%, the S&P is up 9. It doesn't matter if you decided to be 80% bonds. All they're going to do is measure against the S&P 500. And the fund managers are like that too. They're competing against the S&P 500. The reason I mentioned that, if MicroStrategy makes the S&P 500, that is not a stock anyone's going to want to be underweight on, right? Because those equity allocators, they can't invest in Bitcoin directly. 99% of them, they're in the Fidelity Growth Fund. They can't buy Bitcoin, and they need to outperform the S&P 500. And if you're a fund manager, unless you're an absolute donkey, you're going to recognize that MicroStrategy's risk rewards off the charts, and you're just not going to have zero exposure to that. It's not going to happen. At the very least, you'll match what's in the S&P 500 if you have no opinion. A lot of people are going to get significantly overweight that stock in that scenario. Now, one thing the S&P, when you talk about them joining, I think that's got to be concerning to them. The way that MicroStrategy is currently operating by diluting the equity, okay, that's creating a larger market cap, okay? And they have to have a weighted index of the market. So if they let them in and they just start hyper diluting the equity, it's going to eat the indices from the inside out, because it's going to continue to become a larger and larger piece of that index. Even if Bitcoin's staying flat, if they're constantly growing the company, there's no way for the S&P to determine, oh, why are they growing? Are they growing organically? Are they producing real earnings? No, they're just growing. We got to buy more. And I think that's their main concern. And I think that's where the guidance really comes into play, because you can't just be out there all willy-nilly, cowboy style, buying Bitcoin every week by diluting the equity to make yourself larger, because you're going to eat the index. And they have to be thinking about that. We don't want MicroStrategy to be 50% of our index 10 years from now if they haven't made any money, if the stock's down 20%. And I think that's why you see the S&P, they created that little Bitcoin alternative or digital capital alternative index. I think that could be issuing a warning to them, like, hey, guys, we don't have to let you in. We could just put you in this little thing that has no money in it yet. And you're in there with a bunch of Ethereum treasury companies. So I think sticking to that guidance is going to be very important. The S&P's worked 100 years. They make a lot of money off this S&P. Who knows what kind of sources of income they have off of it, but they don't want to take a product that they developed over 100 years and gotten Vanguard and everyone to just bring in tons of capital into the biggest companies in the world and just have it become a mockery because one Yahoo's diluting his stock every week.
Hmm. That's a really interesting perspective, Rally. I think you're definitely onto something there. The crazy part is that if Bitcoin does what we probably think it does, that may end up happening anyway, right? Is that strategy might end up eating the S&P.
And they're destined to become one of the largest companies in the world. I think everyone in the Bitcoin space that truly believes in Bitcoin knows that. But you want to make sure that they're doing it organically, like they're actually growing the company and creating value, not just diluting us into oblivion and everyone's losing money, but it's making up a larger and larger piece of their retirement plan.
Sure. So you think if it does happen more organically and it's not because of share issuance, the S&P is probably, let's say they get added to the S&P over the next year, and Bitcoin does its thing. You're saying its exclusion from the S&P 500 in the future is probably not going to happen because it was an organic kind of representation of the market.
I think it's possible. Yeah, I mean, it seems like they've got some concerns or reservations. I think that them creating that little digital capital index was kind of a way of them saying, let's create a separate track so the people that want this can get it, but we're not going to get hammered if we add it and they just hyper dilute and the stock goes from a 1.4 mNAV to a 0.8. I mean, remember what they did with Tesla? They were a little concerned because Tesla was trading at some crazy PE. That was an obvious concern. You don't want to let somebody in and then the stock tanks 90% and everyone gets burned. It's for sure on their mind. 100% it's on their mind. There's not a lengthy track record of Bitcoin. I don't care what anybody says. I mean, 15 years, 18 years, whatever is not a lengthy track record from where these people are concerned. I mean, they're comparing you against McDonald's and Walmart and Home Depot and,
Absolutely. Obviously, this is for educational purposes, not financial advice or anything. But how are some ways you're positioning, or you'd want to position for MSTR's potential inclusion into the S&P 500? We saw what happened when they got included into the Nasdaq. There was some front running in the, I guess, 4 or 5 weeks leading up to it. Who knows exactly how long it was going on? Do you think market makers or like shops like Jane Street, high frequency trading firms have largely front run the S&P, and Saylor's just kind of been ATMing into that? Or do you think there's still a massive opportunity when S&P 500 inclusion happens?
I think it's depending on the ATM if it's open or not. And let's circle back to the Nasdaq inclusion because I've heard a lot of people saying, "Oh, the Nasdaq didn't do anything." Well, yes, it did. The stock tripled in the weeks, months leading up to it. So yeah, it did something. I know because I was buying it at 110, 120, 140, and later I was selling it 420, 465. You could have sold it 545 if you had a crystal ball. And even on when it did get inducted or drafted into the Nasdaq, it still had like a $20 spike one of those days, which was not nothing. And the S&P is orders of magnitude larger than the Nasdaq, so I think it still matters. One of the things that we've got to be thinking about though is that equity ATM. Essentially, what you're doing with that equity ATM is you're inviting shorts to the party. The Chanos, I'll use him just loosely because he's the only one who's really spoken about what he's doing, where he's shorting MicroStrategy, buying Bitcoin, trying to compress that mNAV. I'm sure there's other people copying the trade. I mean, it's a pretty obvious trade at this point. It's well, it's well publicized. Um, when you open that equity ATM, you're taking away the chance they get slaughtered that day, because if they short the stock and they know there's someone that'll allow them to buy it back at the end of the day, they don't have to go running around. Oh no, the stock's up $30 a share. We can't find any shares. We're going to get squeezed. It's essentially a release valve that's letting them find that. And so even if we get in the S&P 500, even if we get in, if the equity ATM is open, the release valve is still there. And now there's even more people. The stock's widely traded. It's going to be easy for them to get out. So just getting into the S&P 500, if you leave that ATM option available, I don't think will make a huge difference. I'm not saying it won't make any difference, but I think it becomes, just a bigger arbing opportunity for them ultimately because it's more liquid. But if you take that option away with the equity ATM, now they got to have real concerns. You didn't see them running this strategy a year and a half ago. You did, I mean, I've heard this strategy mentioned 3-4 years ago. People that did it got killed because MicroStrategy ran to 6x. Okay, like I'm not willing to take that type of risk if the equity ATM's not open. I'm not even willing to take it right now because Saylor could close it tomorrow. And what am I going to do? Get an alert on my phone while I'm at work? And I'm down 40%. I just got blown up. No, thank you. But these Chanos and company, they've got access to some private data, and they can see what's going on in the market. Robinhood's selling your data to them. They're looking at all this stuff. They know if the ATM's open. They know how to get that information. It is interesting that Saylor has not tapped the equity ATM 2 weeks in a row. If you got your speculator shoes on, maybe he's not doing it, but I don't think so. I think there was a quiet period 2 weeks ago, and then last week, Bitcoin had been going up until Friday, so he didn't need to tap it because he was below the target leverage ratio. So I think that really explains those 2 weeks. Be interesting to see if he uses it this week. My guess is it'll be back on. You'll hear whining from half the crowd, and the other half of the crowd, saying, "Dilute me harder, daddy."
Yep. Yep. Do you think there's any chance he's like just really preparing for S&P 500 inclusion, and then just wants to wreck all these guys who are doing the carry trade on MSTR and Bitcoin?
Heard that mentioned, and that would be a nice chess move. The thing is, like, the path matters here, and every time this stuff is all compounding. So every time you dilute now, that has an impact down the line. Okay, $1 billion worth of dilution now is changing the dynamics 10 years from now. If you think about this as a theoretical concept, there's only 21 million Bitcoin, right? So when people are arguing, oh, Bitcoin per share is increasing, by creating more shares, your potential Bitcoin per share is actually decreasing. Okay, so if there was only 21 million shares of MicroStrategy, they could all own 1 Bitcoin per share. Theoretically, you wouldn't want to do that because you don't want to own all the Bitcoin. That's stupid. That's cornering the market. That's Hunt Brothers stuff. But if there's 210 million shares, well, you can only own zero point 0.1 Bitcoin. If there's 2.1 billion shares, 0.01, it becomes a math problem. So people say the Bitcoin per share is increasing, but you're really chasing your tail because you're going up against a defined bound where eventually that Bitcoin per share will stop decreasing. It has to because they own too much of the Bitcoin. Generally speaking, you don't want to own more than like 20% of a market. At a certain point, there's the Herfindahl index, the HHI, where it can kind of tell you how concentrated an index is. Especially with something with a digital asset, you never want to own too much of it individually because everyone else can take their ball and go home. You've got all the Bitcoin. Okay, we're not saving that asset anymore. You know.
Hmm. Yeah, tons of great alpha here, Rally. Before we wrap, have you been following any other of the smaller Bitcoin treasury companies? Specifically the ones that have these pipe deals where they basically raise private money to acquire a lot of Bitcoin before they went public or before they reverse merged into other companies.
I have. I wouldn't say that's my area of expertise, but it's hard to miss it. I certainly invested in a few when they first came out. Didn't get in too heavy. Was a little concerned about some of the valuations early. I was fortunate to recognize that bubble seemed to be deflating hard, and I got out pretty early, maintained some gains. Nothing life changing, but I took my money and ran on that. It's interesting to see. I saw Metaplanet went below 1 today. I think it was 0.99. So now there's going to be a battle at 1. It'll be interesting to see if they put up much of a fight, to defend that, the company and the investors. It's just going to be really, really interesting. I think you have to start thinking about dipping your toes into these at 1. I'm not going to be personally. I'm too close to retirement. I don't want to risk it on some of these that I don't feel like I've done my due diligence for any, serious amount of capital. I think somewhere around that zero 0.8 mNAV range, I start to maybe do a little more due diligence. Like at that point, that's a pretty hefty discount. But I've got some concerns. When these stocks start trading below 1, doing reverse mergers and pipe and stuff that gets really, it's not super transparent to the investors what the terms are going to be. And so far, it hasn't gone well for any of these people. They're all getting smashed.
Yeah, I am bullish on some of these companies whose leadership team I believe in, but I think entry point is like the real big factor, and it's so obfuscated that it is hard to kind of determine when do you get in? Is it at a 1 mNAV? Is it zero 0.9, zero 0.8, or is it once there's other signals in the market? So yeah, definitely interesting. Do you think strategy looks at acquiring any of these companies that might be trading under a 1 mNAV?
I think I think a time will come with some of them that maybe they have to. If Naka's trading at 0.2, like, don't they have to look at it? I mean, would they not? Wouldn't be doing their due diligence if they can acquire Bitcoin at a significant discount. I don't know that strategy is the one to do this. I'm not sure that's their forte. I think you'd see someone like the Mahler's group. What's that? CEP,
Yeah,
someone like
21.
that. I think you're going to see some consolidation in the industry. There's no doubt in my mind that some of these guys aren't going to make it. They don't have access to the full product offering, capital markets. They maybe don't have the expertise in place to really do this stuff. And I think you're for sure going to see some mergers, acquisitions, et cetera. We already saw one with the Saylor and Strive deal. That one, I don't know that was a forced one. I think that was one they just thought was a good idea. But maybe, I'm not in their meetings. I know there was some conversation about Saylor lending out their Bitcoin at terms that didn't seem too great. They were, 10% plus. So maybe they were in a situation where they needed a partner. And regardless of whether Saylor was or not, some of these companies are going to be in that position. It seems pretty clear soon. Um, yeah, it's going to happen. I don't know that strategy is the one to do it. They seem to have their own model. Um, wouldn't shock me, but I don't think they're going to be the first people that anyone calls.
That's great, Rally. Tell us where we can follow along with the hijinks online and where you're hanging out on Discord or on X.
Yeah, I'm in the Monster Den a lot, MSTR Den on Discord, X, just under Rally Durham. Uh, Try to keep it light. I don't want to get sucked into some massive debate, make a bunch of virtual enemies. But I just do this for fun. This is my hobby.
Awesome, man. I appreciate you coming on. One thing we have all our guests say before they leave is stay orange.
Stay orange, buddy. Second most hated rally out here.
You got it. Ladies and gentlemen, one of the spiciest MSTR accounts you're not yet following on X, Rally Durham.
Thank you.